Thanks everyone for coming along. This is the panel on debt. So if you wanted to learn something about housing in the complex. And we are joined here by this excellent panel of people who mostly know, but I'm going to introduce them anyway because it says in the program. Yes, I warmed the room up for you. First, we're going to hear from Sean Cora from the Pew Charitable Trust about some substantive statistical analysis on debt collection in Maryland. Sean, is Senior Associate with the Pew Foundation's Courts and Communities Project, providing analysis and technical assistance to practitioners on evidence-based policy, which it would be nice to see some of, I have to say. And he previously worked on state campaigns to improve outcomes for youth, families, and communities affected by the juvenile and criminal legal systems. And he holds a bachelor's degree in public policy from the University of Michigan. Sean, take it away.
Can everyone hear me all right? Is it easier if I just don't use the mic? Can you guys still hear me? Yeah. Thank you all so much for being here. My name is Sean. I'm with the Pew Charitable Trusts. Pew is a nonprofit organization that conducts research and provides technical assistance to advance improvement policy solutions. My team, the Courts and Communities Project, works to ensure that people can meaningfully participate in their cases and to reduce disparities and harms perpetuated by court involvement. One of the topic areas where we've done extensive research on is debt collection lawsuits. This is the most common civil case type across the country, believe it or not. Today's presentation won't go into how to better represent clients in these cases. Rather, it'll talk more about why these cases matter, how they are showing up in your courts and impacting your communities, and what you can do about them from a policy perspective. So before we get into it, some national statistics on debt collection lawsuits. Up to 4.5 million debt collection lawsuits were filed in 2022. We've done some recent analysis to show that in many states, since 2022, case filing rates have spiked, in many places back up to pre-pandemic levels. These cases are usually for amounts that are, or half of them are for amounts that are less than $2,000. These are not your $50,000, $100,000 debts that are sensationalized by the media. These are usually amounts in the range of $1,500 to $2,500. Nationally, less than 4% of defendants are represented by an attorney. There aren't enough attorneys to represent people in all these cases. And across the country, people are not able to meaningfully participate in their cases. Between 60 and 70% of all cases end in a default judgment. This is when the consumer is not able to participate in the case, and the plaintiff wins the case by default, automatically obtaining a judgment. We have a very limited data set in Maryland. It runs from 2010 to 2019. It only contains data from Montgomery County, Prince George's County, and Baltimore City. But we've been able to identify that these trends are very similar in Maryland as they are across the country. In just those three jurisdictions, more than 57,000 debt collection lawsuits have been filed each year. The median amount owed in those cases is $1,977, very on par with the $2,000 limits across the country. In Maryland, your representation rates are actually a little bit lower, but interestingly, your default judgment rates are a little bit lower as well. There's a couple of reasons why that might be the case. One, Maryland has some innovative practices that they've tried out to try and increase engagement. I'll talk about those a little bit later in the presentation. And then second, not all jurisdictions in Maryland require the consumer to file a written answer in order to participate in the case. We have pretty strong data across the country that shows that places that automatically schedule a hearing where the defendant can show up, places that have that have better participation rates than ones where you require somebody to file a written answer and then show up in court. So we have data as well on who is filing these cases. You'll see this chart shows the top filers of cases in each of the 3 jurisdictions that we have data for. This is case filing rates in 2019. I know it's not the most recent data, but this is what we have so far. We'll on the request of the industry for more up-to-date data. You'll notice here there are 10 companies in each of these jurisdictions that are filing cases. These companies account for more than half of the cases that are filed in all 3 jurisdictions. You'll notice now that Mercy Medical Center and Regional Management are highlighted. These are the only 2 companies that are actually based in Maryland. The rest of these top filers are either national banks or financial institutions, or debt buyers who purchase debts in bulk for pennies on the dollar and then sue consumers for the full amounts of them. We also have some data from different states on who is being sued. I imagine these trends still exist in Maryland, but we can't confirm that without more data. These are states that we have worked in the past, and so I have some analysis that we've done there. The first is in Michigan. Debt collection lawsuits disproportionately impact communities of color. And you'll notice on this slide, I know it's a little bit small, all the way on the left of the slide, as income levels increase in Michigan, filing rates against communities in majority white neighborhoods decrease, but that trend does not hold true in majority black neighborhoods, where even as income levels increase, filing rates remain relatively steady. You'll also notice that filing rates against people in majority black neighborhoods are much higher than they are in majority white neighborhoods, regardless of income level. This has to do a lot with historical policies on who has been offered access to credit, who's been able to build wealth, policy decisions such as redlining. I also have this slide in Minnesota that shows that debt collection lawsuits impact people in every kind of community. We often hear that debt collection lawsuits are a rural problem or an urban problem. Really, we have the data to support that they're a statewide problem. Some of the counties with the highest filing rates in Minnesota are your urban counties, but then also many of them are also rural counties where there may be 1 or 2 particularly litigious filers in those communities. We also have this data from Oregon, which shows how people across the income spectrum are impacted by debt. I know in Maryland, most legal aid service providers are only able to represent people who fall at or below 125% of the federal poverty level. There are so many families who are working.
Actually, we get a majority, Maryland Legal Aid gets a majority of its money from the Maryland Legal Services Corporation, and their rate is 50% of the Maryland median income, which is significantly higher. It's more like about $40,000 a year for individuals.
Okay.
So it's a little bit more.
A little bit higher than that, okay. That's still fair. But there are still so many people, you would agree, that are working paycheck to paycheck, who are not able to qualify for services, who are being sued for debt, oftentimes are self-represented in these cases. Earlier I mentioned that there were some innovative programs in Maryland's courts. I want to touch on those now. The first is the resolution conference docket in Prince George's County. This is a docket that occurs every Friday morning. It's followed by an affidavit judge docket. But there are a couple things that make this docket particularly interesting. The first is that attorneys of the top filers are required to appear in court. And when a person is sued for debt, they can come to the courthouse. They don't have to file a written answer in order to be able to participate. They can negotiate a payment plan with that creditor. They can say, hey, look, this isn't me. I don't owe this debt. They can sort of have that conversation at the courthouse. And as a result of this docket, stipulated agreements have doubled in this time. Stipulated agreements, yes, you are entering into a payment plan. We think that's better than the alternative, which is a default judgment is granted against you, and now you're having a percentage of your paycheck garnished. Go ahead, question.
Is this for Prince George's County residents that's doing it within Prince George's County, or is it for?
Suzanne, do you want to answer that?
Sure. I'm Susan Lurch. I'm the managing attorney of our consumer project. I'm with the Pro Bono Research Center. So we actually staff these dockets. So people that have been sued they need to live in Prince George's County in order to have proper jurisdiction there. So they are, you don't get to pick to go there if that's what you're asking. So if you're sued by one of these particular creditors, you're put on this particular docket, you don't kind of opt in for it, if you will. So you do need to live in the jurisdiction.
Yeah, I was just wondering if it was a statewide thing or if it was just that county.
So I think he's gonna probably get into that, but they're doing it here, they're doing it, a pilot program in Anne Arundel County right now. Baltimore City does something even a little bit different, just to make it more confusing.
Yeah. Montgomery County used to have a program like this, they recently stopped, but yeah. The second innovative program that I wanna highlight is Baltimore City District Court, Program Resource Center there, the Baltimore Superior Law Service. They offer limited legal assistance to anyone who's been sued for that, regardless of where they fall on the income spectrum. Typically what they're doing there is helping people file forms, filing notice of intent to defend. They are not giving full representation, that's not something that they're capable of doing, but that's totally fine. Stipulated agreements in Baltimore City District Court have increased by 40% since this program was launched. There's a couple recommendations that we have for how to improve these policies even further. The first is to establish statewide expectations for appearance from all parties. This is not a standard practice across the state. In Baltimore City, if you're sued for debt, you're summoned to you're summoned by a judge. Baltimore County, you're summoned to a clerk's office. In PG County, plaintiffs have to show up, but a judge is not actually there. Making it so that everybody has to come to court, everyone is able to participate is best practice. The second is give people the information that they need to participate. So this is making sure that they have all the information about where the debt originated from, how it's passed hands, what the amounts are for, last four digits of a credit card number. All of that information is given to people, but then they also know how to show up in court and what is expected of them, what their options are as well. A couple more recommendations. One is to increase post-judgment protections. Happy to talk about that more in the panel. I know we're a little bit low on time. The last one is make further data available for analysis. This is something that would be super helpful for us, so that we can confirm these trends and help steady to date. So that's all I have for you. I think I'm right on time.
Right on time.
All right, next we have William Steinwedel, who I'm sure many of you already know, the Deputy Advocacy Director for Home Ownership Preservation at Maryland Legal Aid. He specialises in representing clients in bankruptcy, both 7 and 13, as well as foreclosure mediations, with a focus on helping people save their homes. He also handles expungements and participates in community outreach programs such as Lawyer in the Library. He's also, and I did not know this, an enrolled agent with the IRS. So tax questions, please. No, I'm kidding. And volunteers with the Baltimore Cash Campaign. Take it away, Bill.
Good afternoon, everybody. So my name is William Steinwedel. I work at Maryland Legal Aid. So I was told to speak for a few minutes about, how debt affects our clients and how we see it come through our process. So I wanted to start with 3 different clients from 3 different parts of the state, a snapshot of a living basis. I'm currently representing a client in Chapter 13 bankruptcy. Basically what happened was, she was an immigrant to the United States. Her daughter basically had 3 children. One day she wakes up, the daughter's left. She's moved to Pennsylvania, left the kids there. Not my problem anymore. I've actually talked to the daughter, and that was literally what she said. That's not my problem anymore. So she's in this house. She can't pay the mortgage, so she goes back to work, basically sitting with an elderly person 24/7, never gets off to earn enough money to save this house. Unfortunately, despite my best efforts, and in the foreclosure mediation process, they never offered her a loan modification. Unfortunately, Maryland law is currently that if you have equity in your home, if you file a Chapter 13, you not only have to pay the arrearages in the mortgage, which is expensive enough, but you also have to pay, and your regular monthly mortgage payment, but you also have to pay all of your debts back. Every single one. So needless to say, this case has been hanging up by a string. There's currently a motion to dismiss pending, plus a motion for relief from stay, not to get into bankruptcy. So basically, she's behind both on her mortgage and her trustee payment, and I'm trying very hard to keep this alive. Second case just came to me yesterday, and we just settled it the day before. Client comes to me, she only fell behind on her HOA for $400. She was sued for $1,300. All of the rest was attorney's fees and costs. And I noticed that they charged her the attorney's fees twice. So I made the opposing counsel aware of it, received no response. 2 days later, amended claim. All of a sudden, the amount has dropped by half. So I said, so you did charge the attorney's fees twice? Yep, yeah, but now your client has to pay for the privilege of me filing an amended complaint to correct the mistake that I made. My client paid it off, it was dismissed. And then the final case is, I have a client who we actually were able to prove that the mortgage arrears were substantially low. But because, again, of the amount of equity in her home, she is now paying all of her credit card debts, which wouldn't have received one dime, in the bankruptcy in order to save her home. So, these are just 3 examples of what I deal with on a daily basis. And it's very important that there's people like me, but unfortunately, I can't clone myself. But that hasn't happened. They haven't come up with science yet. So I can only take so many cases, and it's unfortunate. So the one thing that, I'm sure everyone in this room heard, growing up, is that people that go into bankruptcy, they're the people that are, going to Amazon or QVC and running up, $25,000, credit card debt, all kinds of debt, and then they file bankruptcy and they get out of it scot-free, So why should they do that? Well, the first thing I want to say is that my credit is pretty good. But I would say of the clients I've represented, 60% of their credit was better than mine. As in, they had less debt than I did. Very few of our clients have very few people we represent at Legal Aid have a lot of credit card debt. There are a few, but that's much more the exception rather than the rule. So the 3 debts that they happen to have the most of is, the first is medical debt. So unfortunately, there is not universal health care in the United States. I know that was a breaking news. So for those that don't have insurance, if they're hurt or they get sick, then of course there's debt. The biggest problem though isn't that they don't have insurance, but that insurance doesn't cover certain things. For those of you that aren't as educated in Medicare as I am, there's 2 Medicares, Medicare Part A and Medicare Part B. And really what they are in reality is basically catastrophic insurance. If you get into a car accident, it's going to pay for it. But unfortunately, if you're low income, even the Medicare copay of $2,500 might be more than you can pay, or a doctor's bill of $3,000, because Medicare's not going to cover that because it didn't reach the limit. So that's just an example of many. The other thing is that a lot of insurance, even those that are available in the marketplace, have very high deductibles. If you have a deductible, that means, and you can't pay it, that means it's collectible debt. Second thing is car loans. I have never car loans as a whole aren't great to begin with. Cars, as Emmanuel said, I am a tax professional. So, by the way, so if a car company ever says that they're selling you something, the government has told, the IRS has told businesses that your car is worth something for 7 years. That's how long you can depreciate it. So if your car is older than that, it didn't worth crap. Sorry, not worth anything. According to the IRS, it might as well be, it's just worth scrap metal, basically, at that point. So any car loan that's of 5, 6 years is basically just, you're just paying for the, it's not really useful after that. It's not like a house where if you pay a mortgage, it's still useful. It's not, really. But I have seen through my work that there's interest rates of over 20%, constantly. And unfortunately, there is generally not, even in this area, which is somewhat better actually than a lot, there is not widely accessible public transportation. So if people have to get to work, they have to have a car. And that's if they can't pay cash for a car, if they don't get a car that way, then they have to borrow money to do so. And then, Baltimore, I believe, has the largest, at one point had the highest fender bender rate in the entire country. So sometimes cars get run into, and then you have to buy a new one or you have to fix it, which adds additional debt to the problem. The last thing I want to say is, and this is something I've experienced on a personal level, and I knew about it already because of what my clients have been through, but I just wanted to mention it. I at one point lived in my parents' house in Westminster, which is in Carroll County. I moved to Baltimore City. My car insurance went from $600 every 6 months to $1,200 every 6 months just because I moved. No, the car was exactly the same. Everything else was exactly the same. My spotty driving record was exactly the same. But just my location, and that just tells you, and that's a thing that everyone has to pay to be on the road. So I just briefly also wanted to mention student loan debt because the law has changed in regards to bankruptcy. You can now, if you fall within very limited categories, there's about 10 categories, you can discharge student loan debt in bankruptcy. I'm not going to go into all the details about which it can be, but I thought, given that it was legal aid, that we weren't going to see very many people. But honestly, I've had to reject cases more than, we've already been successful in getting 10 student loan discharges in bankruptcy. But there is a lot of student loan debt. A lot of people took out debt and didn't graduate, which is one of the biggest reasons that you can discharge it in a bankruptcy case. So that's the one thing I did want to mention. Bankruptcy can serve as a tool. Chapter 7, Chapter 13 to resolve some of these issues. And I think with the questions from the audience, we'll get more into that. But thank you. It was a privilege to speak to you for these 10 minutes.
All right. Our last panelist scarcely needs any introduction. Does anyone here not know who Marceline is?
I don't know.
Well, okay. Marceline White is the Executive Director of Economic Action Maryland Fund, formerly the Maryland Consumer Rights Coalition. She is probably the most effective consumer advocate down in Annapolis, getting things that are priority for consumers passed and squashing some of the awful bills that we get every year, such as the let's exempt anyone who is innovative from all laws. Yes, that was a bill last year that Marceline helped squash. That's who Marceline is. She was also the co-chair, for example, of the Consumer Protection Committee on the Attorney General's COVID-19 task force, and has done extensive work about medical debt, debtors' prisons, car insurance, and in fact, pretty much any consumer issue you could name, Marceline's done. Marceline, it's over to you.
Thank you so much. Can people hear me okay? If I'm here, fantastic. So thanks so much to the other panelists. I think a couple things that come up for me, hearing from them, first of all, is that we know that debt has a disparate impact for communities of color. At my organization, we did a report that was released in 2018 called No Exit, which looked at debt collection in small claims courts in Maryland. I worked with Manny. We looked at Baltimore City, and we looked at Prince George's County in particular, but we did do a statewide look. And similar to what Pew found, we did find that there is a disparate impact. There were higher filings in majority communities of color. So in Baltimore City and Prince George's, there were both more filings and greater debt that was held. And so we know that the communities are particularly affected. Also, with National Nurses United, we did a report in the AFL-CIO called Preying on Patients, which looked at hospital medical debt collections. And when looking at hospital medical debt collections, they are disproportionately concentrated in low-income communities. And statistically, significantly, we had Boston economists look at it, were found in low-income and majority communities of color. And so we know that this affects all of our Marylanders across the state, but is particularly an egregious problem for Black and brown households. I will also say that one of the things we found as well is that, again, in addition to some of the out-of-state plaintiffs, we found in Baltimore City and some other places, some of the larger plaintiffs were the cities doing its own citizens. So around civic debt, and in some cases, you saw the state of Maryland suing its own citizen to collect. And we'll talk a little bit about civic debt in a minute. I will also say, just as we were talking about earlier, debt is increasing. I mean, this is no surprise. We were talking about the affordability crisis in the other room. Debt is going up. If you look at the number of auto loans that are at risk in default, if you look at consumer loans and spending, the Federal Reserve is putting out quarterly reports, and we're seeing greater and greater indebtedness across income levels of people. So even people that were doing well are borrowing more in order to make ends meet because wages haven't gone up and all of the costs are going up. All the costs that we saw going up during the pandemic, which Maryland tried to address through some price gouging legislation, they haven't ever come down, right? I mean, I think that's the thing, like, the costs go up, but they never actually come down concurrently. So that is something we're seeing as well, which means it's more important than ever to get a handle on some of these debt issues and what we can do. So I am supposed to talk about some ideas, and I have a checklist, because we've been working on it since 2018, and we're like trying to go through the list. Some are around the post-judgment collection, what you can do. Some of those things are simply making it easier to claim exemptions. In Maryland, it's extremely difficult to claim exemptions. People don't always know how to do so, and oftentimes, even though they have some wild card protections, they aren't aware of it and they don't claim it. So make it easier, something like a negative checkoff. You know, like you get these exemptions unless you say you don't want them. Something like that would be very easy and would address some of these issues. I know we're gonna talk a little bit more about it, but I just wanna take a second and talk again about increasing protections. And what we're really meaning is keeping money in people's pocketbooks, keeping money in people's wages, in their homes, when they're pursued by debt after you get a judgment. So in Maryland, we did pass in 2020 an expansion of wage garnishment. So now in Maryland, you can keep 30 times the Maryland minimum wage, which is good. But we need to do more because since 2020, the consumer price index has skyrocketed. And so we introduced legislation. So what that meant is people can keep now about $20,000 a year from wage garnishment. They can protect that much for low wage workers, which is important, but it's way below the survival budget. We introduced legislation in 2024, which would have created a flat $750 a week that people could protect and tying it to the consumer price index. That legislation did not get out of the House Economic Matters Committee. So it is something though, again, that we would love to revisit. We do think you need to increase wage garnishments again. In terms of bank garnishments, well, What we do right now is we automatically protect $500 in your bank account. It's self-executing, which just means the person doesn't have to do anything, no matter what. A debt collector can't collect their last $500. They can't zero out their bank account. So that's good. The recommendations nationally are that we should try to increase it to $3,000 in their bank account. So they have, it's probably what, like rent and maybe a little bit of money for food. So they have at least that much in their bank account that's protected. I think even as an interim, if we could tie it to CPI, but again, we passed bank garnishment, it is self-executing, we would love to expand how much we were able to protect. A lot of other states are protecting $1,000. We got 500 and I'd love to see us revisit that. Homestead exemption, I know this is something that legal aid is working on, and right now you have $6,000 as part of a wild card, which I will not get into, but it's like everything can be $6,000. It's $31,000 if they file for bankruptcy, but there'll be legislation, I hope, introduced that will protect at least $125,000 of your home's equity, whether it's filing for bankruptcy or not. And that is good. The recommendation is to try to move this up to the median, but that's about $418,000 in Maryland, because Maryland's home values are very high. So I think at least, again, if you protect $125,000, you can help a lot of low-income homeowners by getting that passed.
And the one thing I just wanna add is that, I know you might be thinking, well, you've fallen behind, you should, get, you shouldn't be able to have equity. Remember, these are policy choices. If you have $4.5 million in a 401k, a judgment creditor can't touch a dime of it, even if you file bankruptcy. But if you have a $50,000 house, the trustee in a bankruptcy or a judgment creditor can sell it. So again, it's a policy choice. It's a choice to protect the upper middle class investment tool 401k and not protect the homestead. I just want to be clear about it. This is just a policy choice that our state made. Same thing with wage garnishment. I grew up 6 miles from Pennsylvania. Literally, if I'd walked 6 miles, probably collapsed on the way. But if I'd walked 6 miles, they couldn't have garnished my, and put my house there, they couldn't have garnished my wages. But because I'm on this side of the fence.
Yep, Pennsylvania, Kansas, Texas, there's some weird, where?
North Carolina.
North Carolina, there's some weird places that don't garnish wages at all. And some of that's formed from like the Farmers Populist Party in Kansas and Missouri and Texas in the 20s, but there's lots of historical reasons. So that's another thing, protecting a family car. We don't have good public transportation here. You should at least be able to have one car that can get you to a job, so you can get yourself out of a cycle like that. There's some other things, and I think maybe we'll get to the Tennessee and some other states have been looking at it, about creating payment plans. So instead of immediately going to garnish wages, you can see if you can set up a payment plan for individuals, an installment payment plan, before you get to these kind of excessive collection actions. Before you're taking money out of someone's wage, can you create a payment plan? In Maryland, there's already precedent for that. In hospital medical debt, we've established a payment plan that's an installment payment, which the House Government HBO and the Senate passed, so it's 5% of your gross monthly wages. So creating payment plans like that for other kinds of consumer debt could go a long way to preventing these kinds of egregious collection actions. Let's see, so yeah, I think there should be payment plans for everything. Because I think for most of the people, 2 minutes, I got it. I think most of the people that we know are not trying to get out of debt. They are trying to make ends meet. They are struggling. They will pay a payment plan if it's affordable. What often happens is they try to negotiate a payment plan and the creditor says, okay, great, give us $500 a month, which is not in their budget to do so. Or they'll try it twice and then they will fall behind. So creating affordable payment plans. I'm gonna briefly mention in my last minute and a half, civic debt, which I mentioned, which is the state suing its own clients. In Maryland, debt, if you owe a debt to a state agency, there are no payment plan options available. It automatically goes to our central collections unit, which charges an additional 17% on top of the debt, because that's how they fund the attorneys to pursue the debt collection. They also have privileges that regular debt collectors do not have. So I think looking at civic debt and looking at the central collections unit, maybe even starting a pilot program with an agency, Starting a pilot program with the agency so the debt doesn't automatically go to a CCU would be a good first step. Seeing how much civic debt is going, it is an important part of our revenue right now in our budget, and I think that's another conversation, but looking at what those numbers look like and if we could do something that helps citizens as well. Medical debt, we've got some of the strongest laws in the country. Very proud of that. Literally some of the strongest protections for people with hospital medical debt. I think there are places where we could look at increasing bans on lawsuits. We passed a ban on all medical debt lawsuits $500 or under. If we raised it to 1,000, that would affect 50% of the medical debt lawsuits in Maryland. So that's something to look at. Hospital protections, we're gonna be working on healthcare credit cards in 2026. And we were gonna be working on coerced debt, which I will be happy to talk about with questions, as well as some programmatic solutions. So thank you so much.
I just wanted to add one quick point about state debt. It is the only debt that I'm aware of that never dies.
Right.
Literally, it never dies. Like, they can collect it, like, if you have a debt from when you're 1 and you live until 98, they can collect it the entire time. Even the IRS stops after 10 years, but there is that state debt stays forever. It never dies.
Okay, folks, it's over to you.